Okay, so I'm just going to record a little bit of my trading here. This is pre-market. We're at 8:05 Central Time. Markets are going to open in 25 minutes. And I've kind of discovered something that I think works for me to help me find better trade entries for longer term trading. I mean, longer runs of day trades, intraday trades. That's what I'm looking for. That's what I'm after. And I'm always having difficulties getting in without getting stopped out. So I recently learned about order block theory. So the idea here is this is a 10-second chart, this is a 5-minute chart, and I'm kind of switching that between different minute intervals usually. So the idea is that, for example, well, anywhere is all the same. So let's say up here, or actually, let's just look at where we are right here. So in the 10-second chart, it's everywhere the same. Just the momentum and the dynamics are a little different. So when price trades up to get liquidity, to tap into liquidity up here, for example, let me get this microphone a little closer. And it creates a run up, a bunch of green candles up here, and then a bunch of red candles down. And so right here, this last piece of going up, this would be a bearish order block, which means there has been sellers here at the last ditch of of this run up that have counterbalanced all of these buyers that are represented by the green candle. So this is creating a resistance the next time price trades up to this. And you can see here, right here, this wick right here of this candle, it just barely trades into this bearish order block, this green candle that's the last of the previous run-up. And the same is true on the downturn on the blue/red candles, right? Here's the run for the stops below this, so tapping into this liquidity. And the next time price trades down here, this run down, these blue/red candles are creating support. They're a support block or a bullish order block for price that trades back down into it. So that's why things are turning around here. So what I'm doing to kind of keep on the pulse of current price action is I'm putting on a trade for 7 ticks profit and 40 stop loss, and I'm putting them on as a limit order in front of an order block. So for example, right here, I would put on a block, an order here to sell limit, and this isn't the most recent one. So I could go down in this particular cadence here. I would actually go down and put that on here. And now that it traded down all the way here, I could even be aggressive and put it down here. Now you have to kind of be really in tune with what the price action has been doing and how much volatility there is, because tapping down this deep in below all this could mean that it's really just running all these stops here. Well, there has been a big run up here, 10-second. So this is on the 5-minute chart. You can see it better here. Here is a liquidity void that it's going into right now. So this here, between the top wick of this red candle and the bottom wick of this red candle, this stretch of the big green candle here is liquidity void. So down here, I would be able to put on the next buy limit order here. Okay, so I would typically kind of frame my orders like this and see which one gets taken first. And the idea is whichever resistance block price action gets into, you see here, this is, so it's like, it's a bit of a judgment. You can go into the top of all these bodies, candle bodies over here, and this is kind of like where it just kind of got into that top wick. So it's there's a little bit of fudge there, but the point being, whenever it taps into this block, which there is an area of liquidity here, because these order blocks represent people who were willing to buy against all these red candles selling. So they're still here and providing a resistance, which means once price action comes down here, it wants to come back up by, and my bet is it wants to come up by at least 7 ticks. And sometimes when you have a very dynamic breakout happening, it does happen that it runs through there and catches my my stop loss. But you see, so this is an example for how it can work. It might be an example for how it doesn't work, but usually, and this is pre-market action, so it's everything here is a little on the slow side right now. And then typically here, when it goes a little bit against me, you can even stack up a couple of orders here and put on another one. The most important thing is to make sure that you never get too close to like a really big breakdown where it could build up energy and really crash through that area. And the other thing you want to do is make sure that you don't double tap. So when an area, an order block has been traded into yet, then it's usually not a good idea to try to tap that again. And then you just go for the next setup. You see this actually worked. So even though it drew down a little bit harder and took a little bit longer, that's that if price action is as slow as it is in pre-market right now, you can be pretty sure that it will still go in that 7-tick retracement right after tapping into an order block. And the beauty of this setup is that it happens a lot. You can put on a lot of trades. I wonder if there is. I don't see that there would be a way of actually automating that as a test. So you see here, this is, and you kind of learn to see the structure between the shorter time frame and the longer time frame. So I adjusted this here now to the bottom of this down wick here, or this down move, and that happens to be right here at the bottom of the body of the red candle here. That's my bearish order block. Actually, that is wrong. I keep confusing that, but actually, the red candle is not a bearish order block, but still, I put it there right now, and you see it's almost going to get me here. Let's see. Okay, so that's a little strong, and so it's probably because I misinterpreted this. This is not, this is not the right. But see, it worked. It worked anyway. So the red one is actually buying, right? There are people here buying against these sellers. So this doesn't necessarily pose resistance. The resistance came in right here on the green guy here, and on the top of both of these bodies. So there are different areas that you can refine, and I just really literally started trying this out yesterday, and so I'll keep you updated on how this works. But and then sometimes, when you see that all of a sudden there's pretty aggressive action in one direction going, like here, that is, of course, pretty dramatic. Then, you might want to get in on that action and put your buying closer, and maybe be just one-sided in the market and not go back and forth to both sides. All right. So here I would put this somewhere here, this 10-second shenanigans. So that's about, close to a minute. So on a minute candle, this would probably be one red candle here in the middle. Okay, that's going up pretty aggressively here now. So I'm going here. And what I like about this is, so every now and then you can see, oh, now it's getting aggressive. I want to get into a longer up move. And then, you know, maybe you put on in, it goes very fast. So now this order block has been traded into. See, this wick has already tapped it. So I wouldn't put one here again because it's more likely that it would have to reach further down into maybe the next order block right here to reach back for more liquidity to pair up with buyers up here. You see now it's comes down pretty aggressively. No. Okay, I'm going to stop the recording right here.